You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means it is Thursday. It is time once again for TWIFO This Week in Futures Options. My name, of course, Mark Longo from the Options Insider Radio Network. Reminding you at the top of the show, make sure you subscribe to the full network wherever you get your favorite podcasts. I'll let you check out shows like the Futures Rundown, very much a sister program to this one, and a whole bunch of other fun stuff. And speaking of fun stuff, make sure you're checking out the Pro if you want more fun in your life. theoptionsinsider.com/pro. A lot of options fun going on over there in the land of the Pro. As you see who's joining us on the old CME Group hot seat this week, I'm pleased to welcome back on our old pal, Mr. Scott Bauer from Prosper Trading Academy. Scott, welcome back to TWIFO, sir.
Mark, how you doing? Glad to be here.
A lot going on in these markets. You ready to talk some futures options flow, sir?
There is a lot going on, and yes, I am.
All right, then let's get down to business with a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side and to the dark side over there at CME Group this week. If you do follow us over there at Options on the old Twitter/X, we do tweet out a fun little extra bonus for you folks, a fun little chart showing you all this data, another premium bit of data we give you folks for free because we like you over there. And if you look at that chart this week, you'll see we are slightly biased towards the red in terms of quantity, roughly, I'd say 60-40 red over green this week. But that said, the largest percentage mover by not quite 2x, but by a comfortable margin is to the downside. Can you guess what it is? What is giving up the ghost out there this week? Listen, I'll give you a couple seconds to mull it over as Scott chooses. Scott, where do you want to begin your journey this week, sir? To the light side or to the dark side?
No, dark side. Let's go that way first. We can end, maybe a little bit of optimism.
You seem like a red saber kind of guy to me. I knew that about you, sir.
All right. On the dark side, crude. Who would have thunk it? Crude, number 5, down 7.45%. That was actually number 3 last week, down almost 9%. Number 4 is Brent, almost the same as West Texas, but that's down 7.48%. That was the leader in the clubhouse last week on the downside, down about 11.5%. 3, lumber. Lumber down 7.76%. Heating oil down 8+%. And number 1 on the dark side, RBOB, down just over 10.5%.
Did you guess it, listeners? Did you guess good old RBOB? Probably not unwelcome news to a lot of you out there who are filling up your tanks every week and cursing at the pump. Giving a little bit back this week, off about 10.5%. All right, sir, to the light side we go. Have it.
There we go. Number 5, the Nasdaq. Nasdaq 100 up 4.47%. Number 4, consumer discretionaries. That is up 4.68, and that was number 1 to the light side last week. 3, silver. Silver making a little bit of a move there, up 5.26%. Technology sector up 5.39%, and number 1. And Mark, I'm guessing not many people had this on their bingo card. Class 3 milk. Up 6.84%.
I'm all about the dairy, even though I'm lactose intolerant. I'm all about
you and me both.
All about the dairy here. Well, we got some bangers on the movers and shakers this week. Almost the entirety of the dark side is energy, so we could certainly go there. We got equities lighting it up, in particular our old pal, the Nasdaq, stealing a march to the upside, and we even got some precious metals sneaking in there. We want to start any of those or something else catching your fancy this week, sir?
I think we should start right at the Nasdaq. Let's go where everybody's looking.
All right, to the equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the wild world of equities, and it certainly is wild these days. You know where to go to find these reports for yourselves. CMEGroup.com/TWIFO, TWIFO, /TWIO also works. Either of those should get you to our reports over there. Yet more free data we give you because we like you out there, listeners. And then once you're in that report, go in that asset class drop down, 4 slots to equity indexes. Top of the index product family, US Index E-mini. Then we're going to go down 2 slots to our old pal, the Nasdaq 100. And man, just what a wild time it has been in the tech-heavy Nasdaq. Doesn't matter what direction, Scott, the indexes are moving in. Chances are the Nasdaq is getting there first. It's moving more. It's just been a wild time in Nasdaq, kind of inescapable. So what's been catching your eye out there in the Nasdaq since we last chatted, sir?
You know, we're seeing so many out-of-the-money calls trading. And, you know, is it a matter of FOMO? Is it people standing on the, you know, that have been on the sidelines saying, okay, it's time to get in? Or is it people or big funds buying upside and maybe selling some futures against it to have a hedge? But out-of-the-money call options have really risen to the forefront over the last week or so.
You folks trade a lot of NASDAQ over there at Prosper, sir. And what are you and indeed your mentees, what are they making of, outside of today, obviously, this little bit of red we're seeing today, but outside of that, what are they making of just this onslaught of green we've seen for the better part of the last week?
It's interesting, Mark, because I've had this conversation with them that just because you see this printing on the tape, it doesn't necessarily mean that the stock, or in this case, the NASDAQ, is going there, right? It could be big institutions, funds that have been on the sideline. Maybe they're short and they're just trying to, you know, put a hedge on and cover. Or the opposite of that, maybe they're buying these out of the money calls and selling some futures against them. Just don't know what they're doing, but we know that it is like record volume that we are seeing. And you know, I think that everyone from retail to institution is just expecting this volatility to continue.
Well, if you fire up the TWIFO reports for yourselves, listeners, we're hanging out at the start of the show right around 29,563 in that NASDAQ future, which means we're up a little over 4% since Monday. Obviously, go back to the end of our show. Last week, up about 4.5%, listeners. And as you would expect, the usual panoply of 0-day contracts are lighting up the tape, in particular today, because they're still slightly out of the money. We got the 29,600 calls going away in a few minutes that are leading the tape with about 2,200 contracts on the tape. If you go out one day, an eternity one day, it's the 29,000 puts, the par puts effectively in the Nasdaq, trading a lot today, 29,000 puts. So that is certainly interesting. But, you know, you could probably pick just about any strike near at the money, and they're pretty hot right now in the Nasdaq. By the way, the Nasdaq putting up about exactly 250,000 contracts as we're talking here right now. So not exactly knocking the cover off the ball from a volume perspective, right around where we expect it, maybe slightly heavier. But Scott, what caught my eye as we were looking here a little bit in some of this Nasdaq flow is not the ridiculous amount of 0-day strikes that are lighting it up, because those are all still very active, and all the ones you would expect, all the usual suspects, listeners. But apparently, Scott, I don't know if you got the memo. I certainly did not get the memo. It is 500-point vertical week in the Nasdaq. Did you know that, sir?
How about it? Yep.
I missed that. And shall we say, interesting strike 500-point verticals. The first one that caught our eye was
that was earlier on Tuesday, right?
Yes, the first one that caught our eye was on Tuesday, and it was a 23,500. So yes, substantially out of the money verticals, listeners. 23,500, 23,000. So the even strike, 500 handle put spreads going up a whopping 2,100 times. This actually makes this the most active contract of the week. These 23,500 and 23,000 puts are the number one and number two of most active contracts in the Nasdaq this week, which again is kind of interesting. All of that going up on Tuesday. Nothing else the rest of the week. If you're wondering, going up for $15.80. We've seen a few of these go up now, Scott. Someone has a bee in their bonnet about 500-point verticals in the Nasdaq. What are your thoughts on this one? Then I'll give you maybe an even better one in a few minutes.
You know, I probably would not want to sell that just on its own. However, that kind of premium for, you know, right now, that's what, 600 points out of the money, which is not that far. It really is not that far. That's a lot of premium. I think that gives you some opportunity to hedge around that.
Well, you know, lest you think this paper is not related, listeners, on the exact same day, someone decided, you know what, there's more 500-point fun to be had in the Nasdaq. But this time, they're not going out. By the way, those puts, listeners, were expiring in 71 days. So that's a pretty long time for the equities these days. But you know what? Someone said that's not far enough. On the exact same day, Scott, someone went to the upside in December. So we haven't talked Dees in a while in the Nasdaq, but that's one of the other more active trades and contracts of the week out here. It was the Dees going to the upside this time, Scott. 35,500, 36,000 call vertical. So getting a wee bit out there, listeners. Again, same day, which is kind of interesting, going up for nearly $41, $40.82. So unless you're saying, oh, maybe they sold the put spread to buy the call spread, not quite going to get it done. Going to have to do a few of those put spreads to buy the call spread. A little bit pricier on the call spread. But I don't know, Scott, kind of strange that we saw two sizable 500-point verticals at all this week, let alone that they went up on the same day, completely different months, completely different directions, sir. What are your thoughts?
Yeah, I mean, someone at least on the upside one is looking for a big explosion. That one I don't look at as anybody putting that on as a hedge. I think that is just it was a new position, obviously, bullish position. And you know what? It seems so far-fetched when you just think of the numbers, right? 35,000, right? 6,000 points above where we are right now. 20% basically above where we are right now. Stranger things have happened. The thought that 6,000 points out of the money, and those things are trading on the 35.5s. Those things are trading $150 a contract, right? Just put your mind to that, everybody. That's there's some decent dough there.
Well, we obviously have to talk energy. It is inescapable this week. But before we roll on out of equities, anything else catching your eye that you want to share with the folks? Could be NASDAQ, could be S&P, could be Russell, could be your favorite Estonian international indexer.
You know what? In the ES yesterday, there was 60. I want to say it was 62% of the volume yesterday. Let me look. I'm sorry, 52% yesterday was on the call side. Typically on any given day, we'll see 35, 65, maybe up to 40, 60 call put. Yesterday it flipped decidedly bullish. So again, is that really a bullish indicator? Is that people coming in buying because they've been short and they're covering, buying because they're selling futures against it? Whatever it is, Mark, people want in to this market. And that's why I said this volatility that we have seen, which really, for summer vol, it never really got crushed for more than like a day or two. This volatility is definitely continuing.
And the show is continuing as well, listeners, right on into energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, let's keep the party rolling on another E asset class. We're going up into energy. So you're going to go in that asset class, listeners. Go up one slot to energy. Then at the top of the list, we got to start with the bell of the ball, or perhaps the one that's driving the ship right now. It is crude oil, and of course, our old pal, WTI, listeners. And coming into the start of the show here in WTI, we are seeing that future at about 77.30, off about 7 1/3 handles, or about 8 2/3% just since Monday. Obviously, you go back to the end of our show last week, and WTI also off about 7.5% from where it was this time a week ago. And is it a banger week out here in WTI? The answer is most decidedly yes. Whenever you're threatening 1 million contracts in WTI, you know the game is afoot. We'll break it all down in a second. But first, Scott, obviously a very topsy-turvy time in crude oil. The straits open, the straits closed, missiles are flying, no, everybody loves each other, oil's up, oil's down, dogs and cats living together. It's a crazy time out there. What's catching your eye in WTI, sir?
Really interesting spot that it's at right now, Mark. We're sitting for the futures almost right on the 200-day moving average. So for those that look for some indicators, those that look for a longer term average like that, that's where it's sitting right now. And yeah, it definitely dipped below there last month in early July, but then recovered right away. So that 200-day moving average, it's not, in my opinion, it's not going to sit. It is either going to have a really nice recovery or it could break through. It is just not going to sit here. So when I look at where the implied vol is of CL futures, of West Texas options, it's not very expensive, honestly. It really is not. So could be an opportunity here to play for a big move one way or the other.
So you folks in Prosper, you loading up on some WTI strangles, perhaps? What have you folks been up to out there of late?
We typically will look at a proxy for WTI, whether it is an Exxon or maybe a PLO, something else in the oil related space. But volatility in CL futures options, really, really cheap right now.
You must have had a big day last Friday then with all the big energy earnings. A lot of big trades going up, sir?
There was definitely some activity. It was a busy day.
Since we're talking single names really quickly, I've been polling a lot of our listeners, or I should say a lot of our guests, and we also did poll our listeners. I have the data on that as well, but a lot of people very intrigued, CME getting back into the single stock futures game recently. So if you wanted to sling a future on, let's say, a Tesla, and maybe someday down the road, the BPs and all that fun as well, Chevrons, they're available there now. So I'm curious, is this catching your eye over there in Prosper? Any of your clients intrigued by these, slinging some futures?
I have been asked about it, and it is definitely coming to the forefront. Like any new product, it takes a little while to usually get going, but CME is rolling these out, just new product after new product. You have these single stock futures, you got some micros and nanos coming out. It's great. It really is great. So I think that the public maybe has to get acclimated a little bit more. However, it's a great tool. There's no question about it.
Yeah, we asked our audience last week about this, listener. They said, are you excited about the launch of single stock futures on big names like your Teslas, Nvidias, Apples, and more? We gave them 3 choices, Scott. Heck yes, hell no, and meh. And the mehs took it, Scott, nearly half, 48.8%. Right? I can't say I blame them. This is, the 3rd or 4th tilt at the windmill for these. Yep. So you got to kind of prove it at this point, right? So I think they're probably playing a wait and see. I think the good news for CME and everybody else is they didn't say hell no. That was only 22%. They sound like they're open to being convinced. You just got to convince them a little bit. 29.3% said heck yes. So there is about a third of the audience who are excited for these. And certainly if you hang out in the futures world predominantly and you've always wanted to trade some of these hot equity names, this does open the floodgates for you. So kind of interesting.
No doubt about it.
Kind of interesting. I don't want to derail us from energy listener. Blame Scott. He brought up all the single names out there. But you know what, Scott? It is, like I said, a pretty active week out here in WTI options. Almost 1 million contracts on the tape. And nearly 60% of that, 58.9% going up in the SEP contract that has about 11 days to go. So that is fairly near dated flow for WTI. But again, can you blame them? This thing's been all over the place over the last week and change. So you don't really need to go out 2 or 3 or 6 months to get action in WTI anymore. You can get it pretty much intraday at this point. So 11 days, that's where we're hanging out as well. The vol in WTI, as Scott just pointed out, starting to get a little bit low. Now, in the historical annex, in this historical tale, a 58 2/3 vol is actually probably a little bit spicy for WTI. Probably usually hangs out more around a 40 to 45. That said, it's off about nearly 6 points this week. But given the context of everything that is going on right now and how much WTI is moving, you could certainly make an argument that a 58 vol in WTI is too low, especially when you look back to not that long ago, a month and change ago, when we were talking about, not even 2 or 3 weeks ago, WTI trading at roughly a 2x vol premium to nat gas. It was threatening a triple-digit vol level just a few weeks ago, so coming aggressively off of that right now. So if you're looking to trade some WTI, maybe Scott's leaning in the right way with a little bit of light side, buying some juice. Looks like skew-wise, we have the skew kind of coming in from last week. The calls last week were 13.5% rich. This week, 6.9% rich. That's to be expected a little bit. The vol is coming in as well. The puts, 8.4% discounted last week. A little bit cheaper this week, 9.2% cheaper there. But Scott, the big dog by a country mile in WTI. In fact, if this was a normal week, this would be about a quarter of all the paper just in this one option. It's the SEP 70 puts. People apparently cannot get enough of this option, listeners. It has traded 103,000 times already. Again, a normal week in WTI, you're seeing 420, 450 on the tape. So 100,000 in one option is no mean feat. That's a lot of paper. And it looks like, Scott, people really have an axe to grind today. Today is the hot day. 76,500 of the 70 puts have gone up. 14,000 on Tuesday, slightly opening there. 7,500 on Wednesday, slightly closing, and about 4,400 on Monday. By the way, the OI coming into today, 27,000. So you're talking 3x of that pretty much have already traded today. So clearly that is opening flow. Weirdly enough, we were just talking about very tight or kind of strange verticals in the equities. There might be one going up today. The 69 puts also in September have traded 60,000 times today. It could be people just looking for another strike to buy, but I'm looking right now. I don't see it going up as a vertical today. What I do see, though, are that these 70 puts have traded today for about an average price of around 84, 85 cents, listeners. So maybe you like these. Maybe this floats your boat. Scott, the 70 puts with about 11 days to go. We've already kind of fallen out of bed. Is that maybe a bit of a bridge too far? Not enough time for you to get across the 70 strike? Do you like those for around 84 cents?
I mean, that's pretty aggressive on hoping there's a breakthrough here. I need more time.
And how weird is it that we see the 69s trading? I mean, if you are doing a 1-point vertical, my first question is why? I mean, do you love your broker that much? But I mean, 69 puts going up today as well, 60,000 times. So there has to be some related flow, I would assume. Maybe we got a bit of a put stupid. Then you're really doubling down, Scott. Then you really need WTI to fall out of bed over the next week. I mean, if that paper is to be believed on its face, if they are indeed buying these, then that's saying we have détente is imminent in the Middle East, sir, and we're back to a 63 handle by next week. What do you think?
I mean, if that does happen, I think we could see sub 70. Personally, I don't see that happening, but yeah, if someone believes that, then again, with the vol where it's at right now, those are probably pretty cheap.
We are seeing that news of perhaps a deal between Oman and Iran for the Strait. Of course, we have seen many, many deals announced and then fall apart almost immediately. So interesting. You like those, listeners? 70 puts, about 11 days to go, right around 84, 85 cents is where they're averaging. If you like it, that as a nibble, maybe you saying sold to you. I mean, the skew is remaining kind of discounted, so some folks could be blasting away at these, saying 70 is 70 in 11 days is a bit of a bridge too far. I will sell those to you. So a little bit of back and forth action on both of those, and maybe you really like the 69s for whatever reason. Let's go a little bit farther out, Scott. Maybe you like this one a little bit more. Once we get past these 100,000 contract monsters, and that's a big print in WTI, let's go out to October. So about 42 days, listen, a little bit more time, to the 74 puts. They have traded pretty actively this week as well, about nearly 27,000 times. Looks like most of that going up on Monday, about 24,000 of that 27,000 going up on Monday. And it looks like it might have been part of a 74-71 vertical going up again about 24,000 times on Monday. I guess that's our theme of the show, Scott, is tight verticals.
Big spread, yeah.
Weird and or tight verticals are the theme of the show. You like that? 74 puts I can see you getting behind. Do you like it as a pretty tight vertical?
No, I'd rather see something a bit wider there. But that with those strikes, we're almost at the money, right? I mean, we were right there at 74. So I'd probably be a seller of that to buy some wings or something against that. I don't know that I would be a buyer of that.
Yeah, that seems weirdly tight to me. I'm just looking here for some prices. I can't find any right now, but interesting stuff. At least you're getting a little bit more duration on these, listeners. Roughly 42 days, and also obviously a much meatier strike, 74 versus 71. So if we do get this downside dance, but it's not quite as aggressive as the 70 handle by next week, then maybe these puts could look a little bit better. Scott, anything else catching your eye in the world of energy? You want to keep on rolling to another complex?
Yeah, let's move on. Unless we get the next détente being off and we see a big spike here, let's move on to the next. Why don't we go into the metals? With gold and silver making a nice little move to the upside.
I think we can make that happen. To the metals we go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody. Welcome to the metals. Pop out of that energy drop down. You're going to go down 4 slots to the bottom of our list, to the metals, listeners. Then we're going to skip over gold for right now. We can always come back to it, but we do have silver lighting up the tape this week. Silver coming in at number 3 to the light side, up about 5.25%, and having a decently active week for silver. Not lighting the world on fire, but putting up about 40,000 contracts right now. So again, it's more than the roughly 20,000 we've been seeing of late. Silver right now, right around 61.75 in that front future, up nearly 7% since the start of the week. So go back to the end of our show last week, up a little bit less out there. And looks like the lion's share, that roughly half of the flow is going up in that SEP contract that has about 20 days to go. If you want more silver talk, check out the Pro. We had our good buddy and the longest running silver bull that I know, aka Mr. Uncle Mike, on the Pro Q&A on Tuesday. And he was talking about, he's been saying for a while he might want to sell some 40 puts to potentially get back in. And we were debating what he's up to out there in silver and whether he is selling those puts to get back in and what his thoughts are on this rally. So make sure you check out the Pro if you want to go deep into all things silver. But that said, Mr. Scott, kind of an interesting week in the precious stuff, including Mr. Silver. What's catching your eye?
Well, with this rally here, we're from a technical standpoint right back up just about to the 50-day moving average. Maybe that has some resistance there. I don't know. I like the 200-day, better, but that 50-day simple moving average is right here, right around the 62 and change area. So we might see this rally, stall a little bit, and we'll see where it goes from here. But volatility is whatever, kind of neither here nor there. But I would expect to see maybe some consolidation right here at the 50 before we see a move one way or the other.
Got to have a feeling our narrative of weird verticals is going to persist, but that's a little bit of a teaser for you listeners. Let's see what's lighting it up out here in silver this week. Again, we're going out to September. It's about 20 days to go. The vol in silver right now, 41 1/3, up about 1/3 of a point, so kind of unched on the week. Skew wise, the puts last week 1.5% cheap. This week 1.9%, getting a little bit of a lift on the skew, ever so slightly, about 2% bid are the puts. The calls last week, 4.8%. Bid this week coming back down a little bit, about 1.3% bid out there, listeners. So interesting stuff. Again, close to flat in both directions. Anything around 1% is really kind of flat to me, but still a little bit of evolution out there in the skew. And the hot option this week in silver is out in September. Well, actually, I take it back. It's slightly edged out. We have to go all the way out to December for an even weirder one. We'll get back to September in a second, because the number one most active contract in silver this week by about 100 or so contracts, it's the October 100s, listeners. Yes, 49 days to go. The 100 calls. They have traded a whopping 3,843 times. So somebody may be thinking we're getting back to the good old days of the start of the year when silver was north of the par strike and things were kind of hot and heavy and insane in the metals market. Doing a little bit more digging, looks like these went up on Tuesday, and it looks like, again, keeping our theme alive of interesting and or bizarre verticals. Looks like it was the 92 100 vertical, changing hands about 3,700 times. All of that on Tuesday, not much trading the rest of the week. And Scott, I guess the one thing it has working for it, it's pretty far out of the money. Not a ton of time to work. I mean, 50 days is not bad, but for the metals, more time the better, obviously. You usually see people lining up in December in this contract. But that said, the thing it has going for it, Scott, is that it's cheap, about 8 cents. How can you not buy it, sir?
Yeah, I agree with that. Totally agree.
Yeah, kind of a weird vertical. Again, if we get that move, though, we saw at the beginning of the year, you'll get a good chunk of change for your 8 cents. So hopefully they're not selling. If they're selling that for 8 cents, Scott, then we need to have a conversation with this person. If you want a more, dare I say it, relevant strike out here in silver, then how about the SEP 85 calls, listeners? That's a close number 2. These have changed hands 3,700 times this week. So again, about 100 contracts distant here. These have changed hand again 3,700 times, 2,400 on Wednesday. Looks like mostly closing there, and about 1,300 on Tuesday. Looks like opening there. Looks like on Wednesday it could have been part of a 75-85 vertical, because the 75s traded about 1,800 times as well. Again, not quite 1-to-1. So if it was a vertical, maybe done on a bit of a ratio. But 85 strike in 20 days, Scott. Are you feeling it? Are we getting back to the meme days of silver, or is that perhaps a bridge too far for you, sir?
That's a tough one. No, we're not getting back there.
Sold to you says Scott,
yes.
Listeners.
Both palms out.
Both palms out. Not selling the 8-cent one, though. That way lies madness, listeners. Speaking of madness, it has been interesting. We were talking a little bit of the big dog in the precious metals, a.k.a. gold, yesterday on This Week in Futures Options with our good buddy Jamal from Tasty Trades. Let's go check in on a little bit of the big dog. You know, the action in gold this year has been, I think, head scratching, to put it mildly. Starting off the year completely insane, obviously. And then during the conflict, perhaps not performing as folks might have assumed for an asset that is traditionally known as a flight to quality asset. Listeners didn't really show that off. And then, of course, over the last few months, taking a bit of a drubbing. And now over this past week and change, roaring back to life. Gold, as we're kicking off the show, 42.69, up nearly 5% just this week, about 4.75%. So getting a little bit of a shot in the arm again, doing about a little over 250,000 contracts, 265,000 contracts. So a little bit more than the average right now. We'll see if more ticks on later in the week. And looks like quarter of that flow is going up in the SEP contract. So we will hang out there. By the way, if you're wondering, what is gold vol right now? Got around 22 1/3, up about 1 1/4 points. Again, you know, historically, that's actually pretty elevated for gold. Usually hangs out, you know, probably in the 14 to 16 range. But that said, when we saw all the madness kicking off earlier this year, a 22 vol would certainly have seemed quite cheap. So an interesting level out there. Scott, what's catching your eye in the king of the shiny stuff, a.k.a. gold?
Yeah, so unlike silver, which is trading right up at that 50-day, if you look at the charts in gold, the 50-day held as just great resistance over the last several months, but it just broke through. So is it a false breakout? Or if we see a retreat in gold here, does that mean it comes back down to that 50, now holds as support? So that's going to be an interesting one.
Let's see if we have any interesting flow out here in gold this week. It seems like, again, the lion's share of the action is going up in the SEP contract. Has about 20 days to go. And we said already the vol's at about a 22. The skew is surprisingly flat to the upside. Actually, the call's 1% discounted to the at the money right now, coming in from about 3% bid last week. So at least for right now, maybe some of the near-term upside is spent. We shall see. The puts last week were literally flat. This week, 5.1% bid. So calls coming in, puts catching a bid. Maybe we are seeing a little bit of the turnaround out there. But the hot option out here this week in gold is the SEP 4,500 call. These have changed hands 7,800 times, listeners. They've been pretty active all week, but the big day was yesterday, was Wednesday. About 4,200 going up yesterday, mostly closing looks like they're 2,300 on Tuesday, slightly opening, about 1,100 today against an OI of about 4,300. So they could be bailing on some more. By the way, the 4,300's also active this week, going up about 7,300 times. So again, keeping with our theme, it is possible we have some 4,300, 4,500 vertical action going up this week. So Scott, our theme is alive. Interesting and or strange verticals are pretty active. Are you down for a little bit of the SEP 4,300, 4,500 vertical in gold, sir?
I'd much rather be a buyer than a seller. For sure there.
What have you folks up there in Prosper? I know you like a little bit of the metals. What have you folks been up to out there? Could be silver, could be gold.
Yeah, in gold, actually, full disclosure here, we bought a put spread when it came up towards that 50-day moving average, and like I said, it's moved through there a little bit. So we got to have a pretty close stop on that if gold continues higher. It's so interesting, Mark. You talked about how it didn't react as the risk hedge with everything geopolitically that was happening, and now we're seeing the Fed get hawkish, if nothing else, right? They're definitely not dovish, but yet normally we'd see with rates on the rise, maybe we'd see gold back off a little bit, and we're kind of not seeing that right now.
So I did a little digging while you were talking, Scott. It looks like the 4,500s traded by themselves on Tuesday, average price of around $22.60. and the 4300s traded straight up for about $60. And then there was a vertical, but it was a different strike than I thought, Scott. It kind of snuck in right below the other ones. It was the 4300, 4400 vertical that was trading on Tuesday. Looks like about a few thousand times for $26.10. So even tighter vertical than I initially assumed, Scott. I thought 200 handles, but they said pshaw to that. 100 handles for around $26. Is that too rich for your blood, sir?
That's a little rich. That is a little rich, yes.
But you're the reason that put spread is getting bid now. I said some folks might be fading this. Sounds like you folks in Prosper, you're the reason, Scott. You're bidding up all this downside right now.
It's right here, everybody. It is right here.
All right, we talk silver, we talk gold. Any other complexes catching your eye you want to share with the folks this week, sir?
I think we've touched the ones that have been moving. I mean, I definitely don't want to talk about class 3 milk, to be quite honest with you, if that's okay. I guess we could go back to the energy space a little bit and maybe look at the Widowmaker natty gas.
That's true. We did escape unscathed without talking about nat gas. So tell you what, listeners, we'll wrap up there with one more brave, some might say foolish journey into energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, once more unto the breach, listeners. We pop out of the metals. We go up again, those roughly 4 slots to the energy asset class. This time in product family, you're going to scroll right past WTI. We already did that. Going down to our old pal nat gas. We were talking about this yesterday on the futures rundown as well. Kind of an interesting year for nat gas. Started out kind of hot to the upside. Then we had all sorts of topsy-turvy action. Most of it to the downside of late, listeners. In fact, nat gas lining up as one of our year-to-date biggest losers yesterday on the show. Coming into the start of the show today, that downside is continuing. $2.63 is where that front future is hanging out right now. Off about 11 cents or about 4%, right outside our downside for the week here. In fact, it would have been number 7 or 8 to the downside for a good old nat gas since our show last week. But it looks like pretty active week. 580,000 contracts. Again, puts that nearly 1 million we're seeing in WTI into context. That's a pretty active week for WTI. It looks like about 30% of that flow is going up in the SEP contract. Has about 20 days to go. Listeners, if you're wondering, the vol, and again, we've been talking about this for a while, that vol premium WTI versus nat gas. Usually it's the other way, listeners. Usually nat gas is the vol king. If you ask me coming into TWIFO any given week, what is the one asset that has the best chance of being at a triple-digit vol? Nat gas is probably at the top of the list. Maybe you can throw a few cryptos in there as well. But those are the big dogs that are the leading candidates to be triple-digit vol. It's not usually WTI, but we are seeing WTI at a vol premium again this week. The SEP contract, we're at about a 44 in terms of vol, up about a little over a point. Skew-wise, not a lot going on. The puts last week, 0.3% bid, so pretty much flat. This week, 0.7% bid, so still pretty much flat. And the calls last week, literally unchanged. They were 1.8% bid last week. 1.8% bid this week. Scott, do you agree with that narrative? That's kind of been a bit of a wild year in nat gas, and what has been catching your eye, sir?
I mean, it's where it's at from where it was several months ago at 6 plus, almost that big spike up, and now it just it can't catch a break. It hit its low just a couple weeks ago, or when it actually, almost right here. It's almost back on its low of the year, right around 250 or so. It did bounce there from April, May, bounced pretty significantly. If follow technical analysis, you saw it bounce up right to the 200-day moving average and stopped, and it's been pretty much straight down from there. But this 2.5 area could be a pretty interesting area. I certainly would not want to short it.
Yeah, it's kind of hard to short nat gas at 2.5. Kind of hard. The animal spirit's not taking me by any means. Yeah, just a strange level at that point. I mean, I know it can get lower. It has historically done that. It just doesn't really motivate the soul to get short down here. Listen, let's see. Speaking of puts, Scott, let's see what's lighting it up out here in nat gas this week, because it is pretty much puts. It is your old friend, the 2.5 puts, Scott. I think you said before the show this is your favorite option on the board. It is the SEP 2.5 put. They've changed hands nearly 30,000 times this week, listeners, right around 28,000 times. Looks like pretty steady paper all week long, right around 7,500 or so, a little more than that some days, but 75 to 7,800 pretty much every day, with the exception of yesterday, right around 5,000 or so. So closing in right around 28,000 contracts right now in these 2.5 puts. Scott, you just mentioned you don't really want to get short right now, so I'm guessing you don't want to load up on a bunch of these 2.5 puts. So what are your thoughts here? 2.5 puts. You're getting some time at least. You're getting about 20 days. It's not bad compared to the equities, but not an eternity. What are your thoughts, sir? 2.5 puts.
Yeah, I'd probably be a seller. I'd maybe a seller of a put spread there. If someone had said to me, "You buying or selling these?" I can't find any rationale, any reason to be shorted here. I don't expect to see natty gas, going back up towards 3.5, 4 anytime soon. But this certainly needs to be a support area.
Getting a little bit of action on those 3 calls also expiring in September, listeners. They've changed hands about 17,000 times. And again, weirdly kind of symmetrical paper, right around 4,200 to 4,700, pretty much most of the week, with the exception of Tuesday, 3,200. Again, total about 17,000 on the week. Seems like some folks might have been opening on those 3s on Monday and then kind of getting the heck out of Dodge later on in the week. So some folks could be abandoning that 3 strike, deciding, 3 handle in 20 days might be a bit of a bridge too far. 2.5 puts are kind of the name of the game. You go all the way out to October, nearly 50 days. These have changed hands about 19,000 times this week. So a pretty active strike. The 2.5 strike is kind of where the action is this week. Also seeing them all the way out to November. We have those about 17,000 changing hands there as well. And if we go out to Dece, where that future is obviously much higher, listeners, at a 3.5, those 3 puts are pretty active right now at about 17,000 this week as well. Scott, when you're out there trading nat gas, what is your preferred vector? Are you out there in the options on the futures? Are you looking at some of the various ETFs like the much maligned Bauer? What's your go-to?
Bauer is, I don't know why it's much maligned. Bauer is actually not a bad one whatsoever. It's got really good, significant, I think, volume. Markets are usually pretty tight. So that ETF is good. I think if I'm going to take just a position, a directional position, I'd actually rather just go right to the NG future. But Boyle's not a bad proxy. It really isn't.
Uh-oh, Scott, the Bauer Defense Force. I like it.
Someone's got to do it.
Someone's got to do it out there. Yeah, a lot of these, ETFs, obviously, they vary in quality, the ones that try to replicate the futures positions. But sounds like Scott's a fan of Bauer. So we'll keep an eye on that one, listeners. Unfortunately, that music means that's all the time we have for the show this week. Scott, you survived another one. Well done. Did you have fun, sir?
Always do. Always do.
And before we go, sir, if folks are intrigued, maybe they want to talk some Bauer with you over there at Prosper. Where should they go? What should they do?
Well, I'll give them about 25 seconds on that one, but they can find me at prospertrading.com.
There you go, listeners. Pretty easy to find, prospertrading.com to learn more. And of course, you know where to go to check out our report. CMEGroup.com/TWIFO, TWIFO is the place to go to kick the tires and light the fires. That's going to do it for us on TWIFO today. Not going to do it for the network, though. Back again after the closing bell to break down all the action on the Hot Options Report. I'll see you then. And then back again tomorrow, of course, talking vol with Dr. Vix and other various guests over there on Volatility View. Should be a fun one. Back after that show for a little bit of pro action for all of our pro friends on options oddities. If you can't find something to trade on that show, you're just not listening. And then, of course, back again next week all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.